Now, turning over to the Silicon Valley Bank crisis. U.S. President Joe Biden vows for stiffer bank regulations and the safety of the country's banking system, while the Federal Reserve is launching an investigation. Our Shin Ha-young has the latest.
U.S. President Joe Biden has vowed stricter bank regulations to tame concerns stemming from a string of bank failures. His remarks came on Monday local time after the nation's regulators imposed emergency measures following the collapse of Silicon Valley Bank and Signature Bank. Biden said Americans can be confident that the banking system is safe and that their deposits will be there when they need them.
That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers.
He added that the managers of these banks will be fired and that investors would lose money, saying they knowingly took a risk. The same day, the U.S. Federal Reserve announced that it launched an investigation to review the supervision and regulation of SVB. In the statement, Fed Chairman Jerome Powell said that the fallout of SVB demands a thorough, transparent, and swift review. Vice Chair of the Fed's supervision Michael Barr is leading the review, and the results will be announced on May 1st. Citing an anonymous source, Bloomberg reported that the U.S. regulators are reviewing whether SVB and Signature Bank conducted the required planning and stress testing following the Fed's rate hike, which started last year. Amid the growing questions about the causes, according to the Wall Street Journal, the auditor of the two banks, KPMG, is highly likely to go under investigation as SVB collapsed 2 weeks after KPMG gave the bank a clean bill of health, while the failure of Signature Bank came 11 days after the KPMG signed off on its audit. The worst-case scenario would be a series of bank runs where customers panic and try to withdraw their money out at once. But so far, this has not happened due to the emergency measures put in place by Washington. First Republic Bank, which saw a decline in its stock price of more than 60% on Monday, is reportedly operating as usual. The founder of the bank said that it had received additional liquidity from the Fed and JP Morgan Chase and is not seeing massive outflows. Shin Ha-young, Arirang News.